The financial markets are a fraud, they're fake, and they're there to trap you in. You came here for the truth, so let me unveil that for you. Today we're going to take a little different spin, and I've seen many people discount their thought that there could be another financial calamity. So let's take this for a moment and explain what we're talking about. We have seen the market rising and rising and rising throughout the years, and it has done so, and nobody disagrees with this, on the back of the central banks. They've been printing up money, they've been lowering interest rates, and they've done so to unprecedented levels never before seen. This has caused the markets to move up. Okay, it's a direct result. We've seen the charts of the G3 central bank balance sheet and how they are completely correlated to the stock market. Looking at these numbers, you'll see that if the central banks do pull back on this liquidity, that they would cause a crash. Okay, I would say most people would agree with that. The problem is that most people believe that they won't do this because then they would lose control of the system. So I would have to beg to differ, and if you'll stay with me for a moment, I'll explain what I'm talking about. I usually get into this into just, little tidbits or maybe in the comment section, but I've never done a video specifically about this, so I definitely wanted to get this to you. So hang in there very quick. Now, this stock market, the financial system, was created by these bankers. Okay, it's created by the Rothschilds, created by the Rockefellers, it's created by all these big banking establishments. They designed this system. Okay, they've literally made the stock markets, the bonds, and everything else. They decide what the prices are to be set at. They are the central banks. They're the shareholders. They have their men in the positions of power in the government. They own it. They control it. Whether the stocks go down to zero or the stocks are at 1 million, they own it, they control it. There is no losing it. Now, they may lose temporarily their value of the assets. So if the stocks they own, for example, they own $1 million worth of Apple stock, okay, and it goes down and now their value is 100,000. Well, they've lost a lot of money. However, they haven't really lost those assets to begin with, right? So they may be okay because they're not going to be shaken out of it. They know when the stock market's going to rise. They know when it's going to drop. They are able to determine that, okay? They have the eyes basically to see that because they're the central bankers of the same group. Okay, now, when you see what could happen into the future, you would be able to determine this will be a crash at some point. I would suggest to everyone that this is done intentionally. And so then we can buy up assets when they're at very, very cheap prices. We'll sell off the things we know are overvalued and we'll buy up these cheap assets. And they do so not only to consolidate wealth, they steal the wealth from the people and they buy it up. Look at what happens every single time there is a crash. You have the weaker investors find their way out, and the big boys always end up doing very well. Look at a guy like Warren Buffett, for example, okay? He indirectly got a bailout because of Wells Fargo, and he also got sweetheart deals like with Bank of America. And after it all, he's just fine and dandy. But look at how many people aren't doing well after the financial crisis. A lot of people. A lot of people that had investments prior to the financial crisis and then still have them today aren't doing as well as the people who bought a few years ago because they had to suffer. They had to hold those assets right through all that. It took several years. I believe it's something like, let's say, 7 years or so to come back to the level from before, nominally. When you factor in for inflation, you get a different picture. My theory here is that what we have historically are crashes created intentionally because of central banking. They do so to consolidate wealth and they do so to consolidate power. How many companies do you see having these mergers and acquisitions? Every single time there is a down economy, you will see that taking place. Mergers and acquisitions. There are fewer and fewer hands controlling the total piece of the puzzle. You get this sort of too big to fail, and what happens? All these companies, right? They come out, they say, look, we're in big trouble, okay? Everything's in big trouble, everything's coming down, our whole balance sheet's in risk, government, you need to help us. So they say, okay, Warren Buffett, you get out there, we'll give you some sweetheart deal, you can buy up that bank. Or they say, this one bank, you buy out the other bank, and we'll help you out, we'll make sure all the thing is okay, and everyone's balance sheet's gonna be okay, and everyone's gonna do just fine. But that consolidation occurs. One bank at a time, one corporation at a time. So suddenly too big to fail becomes too big to fail, really too big to fail. And that's the way it works. Every crisis, they will consolidate more wealth and more power. And I see this every single time. Look historically, I've read so many historical books about the financial system and what has happened. And this happens every time. Every time. The only time when this didn't occur, surprisingly, was after the creation of the Federal Reserve, and that is 1920. So from 1920 to approximately 1921, there was a depression. Nobody knows about it because it was so quick. There was no intervention on the Federal Reserve's part, and as a result, economy went skyrocketing after. I wrote about that in my first book, how that's the answer. What do you need to do to have success? Don't intervene. What have they done every single time ever since? They've intervened. And as a result, you get this ridiculous economy. So that's all for this video. I wanted to make it very clear. I wanted to spell it out, and I could reference this video in the future. So if you found it informative, please give me a thumbs up. And don't forget to check out my website, themoneygps.com. I've got a free e-course in there that explains everything for you. I've got free ebooks on there. Also on my main YouTube channel page, if you scroll down to the bottom, I have a section called How To and Solutions, because so many people have been asking, what about solutions? What about solutions? So I'm bringing that to you there. I'm going to continuously add to that playlist there, so check that out. You can see the e-course there as well. Take care.